Hi all, today we are going to see the difference and similarities between bonus and stock split. I have already posted videos about both. I will attach the links of both the videos in the description. Okay, let's move on to the topic. Now we'll see about bonus and stock split in brief. First, what is bonus? Bonus means company issues free additional shares to its shareholders. Now what is split? Split means company divides its existing shares into multiple shares and gives them to its existing shareholders. In case of bonus, let's assume a company has announced a 2:1 bonus. From the mentioned ratio, the right side of the ratio refers to the number of stocks owned by the shareholder, and left side of the ratio is the number of shares the company has promised to give to its shareholders. Let us consider this example. If a person A holds one share of company X and the company X announces a 2:1 bonus, so he gets two additional shares apart from the one share that he holds, and totally he'll be owning 3 shares. Let us now consider the same ratio for a stock split scenario. Let us assume a person A holds one share of company X and the company has announced a 2:1 stock split. Now the one share of person A would be split into 2 shares, so totally he'll be owning 2 shares. Why does a company offer bonus to its shareholders? Generally, the profits earned by the companies are stored in the reserves and surplus. Reserves and surplus is similar to treasury. When the reserves and surplus becomes enormous, the company decides to give it back to its shareholders in the form of dividends or bonus. Why does a company announce stock split? If a company feels that their stock price becomes too high and their trading volume has decreased, they split the shares so that the stock price comes down and it will attract more investors, so the trading volume would increase and the price also would slowly and steadily increase. Let's see how bonus is given. Bonus is given from the company's cash reserves and surplus. On the other hand, split is given from the existing shares based on the face value of the stock. Impact of bonus on stock price. Let's assume the stock price of company X is 900. It has announced a 2:1 bonus. Now, the stock's price would drop to 300 rupees after the bonus shares are issued. Let us see how the stock price of one share changed to 300 rupees. As I told you earlier, in case of 2:1 bonus, we will be having 3 shares in hand. So the new stock price would be, that is 900 divided by 3, which is 300 rupees. Will there be an impact on stock price when a stock split is announced? The answer is yes. Let's see this with an example. Let's assume the company X share price to be 900 and it has announced a split in the ratio of 2:1. So we have 2 shares for every 1 share that we hold. The new market price of the company X share would be 900 divided by 2, which is 450 rupees after the stock split. What happens to the stock price soon after the announcement of the bonus and stock split news? Mostly from the announcement date, that is the date on which the bonus or stock split news is announced, until the X date, the stock price is likely to increase, as these are sentimentally good news to the market, and markets mostly work on sentiments. What happens to a face value of a stock after stock split is given? Face value gets considerably reduced based on the ratio fixed by the company. For example, the company X has a face value of rupees 10 and it has fixed a split ratio of 2:1. Now the new face value would be 10 divided by 2, that is 5 rupees. Impact of bonus on face value. Face value of a stock does not change after the bonus shares are issued. Let us assume company X has a face value of 10 rupees. After giving bonus also, the face value remains the same. Does market capitalization gets changed after a bonus or stock split? The answer is no. Let's see it in detail. Market capitalization is calculated as current market price into the total number of shares. Current market price is reduced in both the cases, and the total number of shares is increased in both the cases. So totally, market capital doesn't change. Let us consider a simple example. Let's assume a company X has 1 crore shares and the current market price is 900 rupees, and the company has announced a bonus of 2:1. Now, the current market price of the stock would get changed to 300 rupees and the total number of shares would get increased to 3 crores. And still, when we calculate the market capital, it would still remain as 900 crores. That is 300 rupees multiplied by 3 crores. Similarly, for a stock split, let's assume the company X has 1 crore shares and the current market price is 900 rupees, and the company has announced a stock split in the ratio of 2:1. The current market price of the company would get changed to 450 rupees, and the number of stocks would get increased from 1 crore to 2 crores. So overall, the market capitalization would still remain as 900 crores. That is 450 rupees into 2 crores. Let us summarize all that we saw using the below tabular column. Stock price gets reduced in both the cases. The face value remains unchanged after the bonus and gets decreased after a split. The number of shares get increased in both the cases. Reserves and surplus gets decreased after bonus and there is no change after a split. The market capitalization remains unchanged in both the cases.